Good morning, everybody. This is Mark. We're here Friday for the morning call. We're in the thick of earnings. Basically, this market for the beginning of the year obviously has had a very good run. We're at new high, 5-year highs. The bid continues to this tape. That being said, I'm a little surprised we haven't had the shake the tree moment. I know the media is now starting to get behind this rally, which they're always a little late, so you just got to be a little skeptical. But right now, everything's telling me that there's a continued bid underneath this tape, and I think you got to respect the fact that the trend is your friend, and really just keep trying to capitalize on what's in front of you. Lots of good chart patterns out there, and lots of good activity for us to really try to take advantage of. I have the spiders up right now, and you can just see, yesterday took a little break, which I think is good. I wouldn't be surprised to see the S&Ps, digest for a few days, and I think you'll actually see probably a little bit better action in some of the stocks. You obviously have to be a little more selective, but that's part of the game. Relative strength, relative weakness, you'll start to see a little bit more as the S&Ps start to take at least a break or digest a little bit up here. The other indices, IWM, same type of thing. And Q's obviously lagging a little bit, i.e. Apple. The fact that we're actually up at highs and, things are moving higher and Apple is at basically, few multi-year lows is pretty impressive for the tape overall. And that's just a good sign overall that there's a flow of money coming in and rotation has happened. We've been talking about Apple for a while, and it's been a technically beaten up stock, and it really has not been the same stock for the last few months. And obviously earnings have now, gave it that catalyst to obviously push it down below the 500 level with some authority. And at this point, no one wants to own it. Do I think between probably 450 and at this level and 430, 420-ish probably is the level that you're going to find at least a rounding bottom at some point in time, but that's going to take time. There's not going to be a rush to get involved based on what happened over the last few days, and obviously what's happened with the earnings expectations. So certainly not the same stock it was. Certainly keep it on the radar, but we'll be keeping you up to date. Best in breed, guys. I mean, you could just keep seeing it. Google, very, very impressive. Good earnings. Basically, looking to test October's highs or September highs. That be looks good. Amazon, we're still waiting for earnings. That touched new highs yesterday, and nice little bull flag that looks like it's going higher. Understanding that the earnings multiple is, not what everybody wants, but the technicals are telling us the stock is going higher. Obviously, we'll have to wait and see what happens with earnings. Netflix was a standout yesterday, certainly. I would expect to see a lot more basing up here. That's a big, big gap. I don't think it's going to, at some point it might try to begin to attempt to fill a part of the gap. But I would just expect a little bit more basing for the next few days. And we'll have to wait and see what happens. Very impressive move. I'm pretty surprised. But I think that's the MO of this tape. A lot of these stocks that are very shorted are really getting taken out, and people are getting run over. I mean, I saw yesterday in Tizu, a stock that, quite frankly, heavily shorted, has really done nothing for a very long period of time. And I put the weekly chart up. You can see there's a little resistance here, and then on the weekly, 2680. But I got to tell you, this stock, it's an Expedia, Priceline, Trip, very similar. I wouldn't be surprised to see, with a little more basing, this gets back on the radar. And that's what I'm seeing. A lot of stocks that really, quite frankly, from yesteryear, from many years back, if you've been doing this a long time, have gotten back on the radar. And that's the MO. And I look for those type of patterns to really give me an indication of what's happening and where money's flowing. You can go across numerous sectors, numerous stocks. The ag sector, continued CF, continued good move. It's best in breed, in my opinion. AGU had a good move yesterday. I think it was an upgrade. They probably need a little bit of a break, but they still look very, very, very good. Priceline, I know we're still waiting for earnings. Technically, looks like it's right on track. eBay got an upgrade. It's like I can't find a lot of patterns that I think look bad. Maybe take Apple out of the equation. It's just lots of rotation that's continued to happen. And we've been talking about it continuously, that there's a bid to this tape, and it's here to stay. It seems like it's here to stay. Obviously, a shake the tree point moment will come, but you got to respect the fact that we're still not overbought, and this movement is healthy. that's happening. And it's going to hopefully, ideally, continue to stay healthy, understanding you're probably not getting the same intraday movements you might want, but the same MO is happening. Every time at 12 o'clock, 12:30, take maybe a little bit out of yesterday's equation, because it was a little different playbook. We get a bid to this tape, and that bid continues. RIM, something I was talking about for buying on pullback, and we had that buying opportunity yesterday, and then you had some catalyst with the news-driven event. Looks like before, I've been saying this a lot, just like Apple, the top will probably be seen a day or the day the new RIM product is announced, is released to the public. So you still have, I think that's another week and a half. So I think it goes higher. I think you're going to see a 20 print in the stock before that happens. We'll have to wait and see what happens, but technically looks good. Facebook, stock we love to, sit and wait. Hasn't given you a whole lot intraday. Starting to find nice consolidation that I think is going to make its move higher. Respect the fact of certainly the 21-day, 29.50. I don't know if we're going to see that at this point. If we hold this bid to the tape, we're probably not going to see it. I'm involved, obviously not nearly as heavy as I probably could be. I'll probably wait for a trigger or a little bit more time of basing above 30, and it will get me a little bit, give me a little bit more conviction for that idea in order for us to take advantage of it. Clouds had a day yesterday. FFIV was up. It was a day that a lot of stocks that, quite frankly, were basing, resting, just really exploded out of some bases. I also like, from the social media side, LinkedIn. I know earnings are in the beginning of February. This stock, we obviously all know the company. It looks great. Above 120 was really a little bit of a trigger. So I'm looking for it to be probably 125 before earnings. And I don't know. I mean, I don't know what the short interest is, but it's telling me. My gut is telling me that this should head higher significantly, as in the short term. We'll have to wait and see. The technicals are looking good across the board. That's where we're at, guys. The banks continue to lead, understanding they probably got a little ahead of themselves. Goldman ideally would need a little break, maybe test back to 140, 142-ish, certainly. That would be a healthy tape, healthy action. But that's the key. You want to let that break, and on that pullback, you look to get back involved, and you make your secondary trades. And that's how I'm looking to get involved in this tape and continue to stay involved in this tape. You got to keep moving your feet. You got to keep recognizing that sector rotation is happening. I've been mentioning the semis. I know CLAC had a good quarter. I know Altera didn't have a good quarter yesterday, but CLAC, good looking chart. It's a sector. It's not necessarily something I'm going to day trade, but it's a sector that's back on the radar that, quite frankly, has not been on the radar for a period of time. And that's where I'm at. I think a shake the tree is going to happen, but I'm going to respect the fact that the technicals, the long-term charts, and even short-term, smaller time frames are telling me this market has a bid to it, and you can keep reducing risk, but pullbacks are viable to keep moving averages. And until that stops working, I'm going to be the guy that's going to be buying in front of that, and keep trying to take advantage of what the market is telling us. Good luck today. It is a Friday, so we'll see if the action's a little slower. Obviously, volume is not backing up this entire move, but that's sort of the new MO. Volume is not backing it up. I just heard an article that retail is still underinvested. That's not a surprise. Retail will come in probably as we continue to go higher, and that's just the MO of this tape, and that's sort of why the catalyst, where I still believe we're heading higher with some bases and consolidation in the near term. Good luck today, and I'll talk to you all later.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.